Welcome to my weekly market roundup, 22nd November 2020. If you can hear me and see my screen, please let me know using the YouTube live chat panel. I am Sagar Nandi. I used to work in information technology. I have retired now and I am swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. This is my website sagarnandi.com, my YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. I regularly share live market and stock analysis on these channels. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I'll use the same systems that I use in my actual trading to analyze the market and stocks. I'll use Q Elite and Q Global for technical analysis. Q Elite runs on TradeStation. Q Global runs on Metastock platform and it uses Metastock Zenith real-time data. For fundamental analysis, I use Q Vital, Sector Industry Rotation Analysis, Q Edge, and Market Level Index Analysis, Q Index. That allows me to take trades when and only when the market level, industry level, fundamental level, and technical level forces are aligned. Everything done in real time, and that gives me truly higher probability trades. We'll try to find out a few such trades in today's session also, and I will point to few of the enhancements I am making to some of the Q systems. That was the last slide. I'll continue with the live system. Let's start with the Australian market first, global indices, starting with Australian index AXJO. Australian market broke out some time ago. It displayed a bearish headwind a few days ago. However, that time the candle had a lower tail in the daily chart and the weekly was very bullish. Therefore, there was no bearish headwind trade setup. We might be cautious and protect our position in individual stock using trailing stop, but we didn't have to exit any position. After that, price has gone up a little bit. On Friday, it closed with an indecisive doji candle. It is reasonably above the upper boundary level and the band indicator is overbought, the stretch band indicator, for many days. It is bullish, however overbought, so we'll avoid taking new positions in AXJO right now. Japanese market Topix index. It is also bullish, however not so bullish as Australian market because the weekly candles for this week as well as the previous week, they have upper tails. Still it is bullish and again at the upper boundary level, therefore overbought. We will not take new position in Topix right now. Chinese market CSI 300 index. In the last webinar, I mentioned that in the daily it broke out, pulled back, and I was waiting for a cyan color candle in the daily chart. That came on Thursday. The weekly candle color was already bullish, cyan. Therefore, on Thursday, the go with flow long trade setup came in CSI 300. At that time, you might look to buy individual stocks that are fundamentally strong in the Chinese market. Remember, if you remember my last webinar, you know that I was already anticipating this trend because the weekly color was already bullish and the daily pulled back just enough to give a go with flow long setup. That is how once you get used to the Q trade setups, you can start to anticipate. And if you did that, you wouldn't need to you needn't wait for the close of market on Thursday to take the trade. You could use real-time scans to find that the go with flow setup came in the index during the day and take an early entry in individual stocks. This is also bullish and it is not overbought. On Thursday, it gave a go with flow trend following long trade setup. UK market FTSE index. Here also the weekly candle for this week and the previous week, they have upper tails similar to the Japanese market. Bullish however with upper tails, and daily is overbought above the upper boundary, bullish, but we are not going to take any new long trade in FTSE right now. And India's Nifty 50 index, that was the strongest for many weeks and that strength is continuing. Again, it is overbought above the upper boundary level. Therefore, we are not going to take any new position in Nifty 50 now. The positions that we initiated earlier, probably at the recent low, probably using the bullish flow candle here. Remember, we saw a bullish flow candle in Chinese market on Thursday. In Nifty 50 in India, the similar bullish flow candle came many days ago. That was the optimal buy point. After that, price has gone up. It is bullish, but the flow color didn't turn cyan. That is how the flow color turned cyan only at the swing lows, telling that is the lower risk buying opportunity. All the global markets are bullish now. What about the USA market? Until last week it was bullish, and I mentioned in webinars and also through a post on my site that though it was bullish, it was also overbought USA market. Therefore, one might be cautious and may not keep on adding to positions if one already had a significant number of bullish positions. Let's look at the USA market, and because it was overbought this week, I will look at the USA market from the ETFs as well as the futures and maybe even the indices. I'll use the indices for market breadth analysis, and I will start with the ETF and futures analysis. Let's start with E-mini S&P 500 futures ES. For the futures, I will use Q Global on Metastock. For the ETFs, I will use Q Elite on TradeStation. For market breadth, I will again come back to Q Global on Metastock. S&P 500. It is not looking so bullish. It's not looking bearish as well. In some respect, it is looking weak because in the weekly chart, similar to Australian market, sorry, not similar to, similar to Japanese market and another global market we saw, the last 2 weeks candles have upper tails. That is not very bullish, and price closed below this watermark resistance. That is not so bullish, though the backdrop color is bullish. If you just looked at the weekly chart right now, ES, you mean S&P 500 futures, you probably wouldn't take a new long position. Instead, you would focus on protecting your existing positions or maybe even book profit in some of them. In the daily, the bearish headwind came a few days ago. I mentioned it right on that day. There was no bearish headwind short trade setup, so one didn't have to exit any position, but one could protect existing positions with trailing stop. Around that time, I took some hedges using put options, and those hedges gave me more profit than the small losses I had to take on the long stock positions that I didn't want to exit. As price came down and it closed above the trendline support, I decided to close my hedges with small profit. Not very big profit, it didn't drop much. And also on Thursday and Friday, though it tried to fall down, it didn't. It recovered. That is why my put options on SPY, and I had some vertical bearish position on QQQ. They had some profit but not a lot. I booked my profit seeing that price could not break below trendline support. If you look at weekly, you will not initiate any new long position right now. If you looked at daily, you wouldn't take any short trade either because the trend line support is very close. That is the picture we see from E-mini S&P 500 futures. What about SPY? Let's look at SPY. In the daily, SPY is also inside trendline resistance and support that is similar to ES. In the weekly, the candles are little bit different. They don't have upper tails. That is normal because futures are 24 hours instrument. ETFs are not. Here also the instrument SPY closed below the watermark resistance. That is not so bullish. However, here we have trend line support nearby. In daily it was there, in futures also. In ETF the trend line support is there, in weekly as well. That is a reason we may not be bearish right now. Now let's look at NQ, the Nasdaq 100 futures. The NQ is not looking so bullish because it is below the memory trend line in weekly. Weekly backdrop color is also bearish. Daily is below trend line resistance, multiple of them, two of them, and the support is quite a distance away. In fact, if price could come down from here, that could give a very low risk shorting opportunity at trendline resistance. If you looked at NQ, weekly, daily, either or both, you would not take a new long position now. What about QQQ, the equivalent ETF? The daily is telling that there may be a very low risk shorting opportunity if price comes down from the trendline resistance. That is similar to NQ. Similar to NQ, QQ backdrop color is also bearish. However, it has a trendline support in the weekly chart. And for 3 weeks now, price closed inside this narrowing trend line formed by resistance and support trend lines. Inside the narrowing triangle, this week's candle shape is indecisive. That is telling us in aggregate the conclusion is, if at all we are going to take any trade in QQQ based on the current charts of QQQ and NQ, it will be on the bearish side, not on the bullish side. But bearish side also I will not be so comfortable taking that because of the trend line support in weekly, but certainly not bullish side. If price can come down little bit, the trend line support in weekly will be broken. That may be the point to take a new short trade. let me add few more insight from the other futures, then we'll come to a conclusion what to do after we complete our analysis. Let's look at Tao Futures YMC1 YM. Again, the weekly candles are bearish. Looking at that, we are not going to take any long trade now. I mentioned about the bearish headwind in the daily. Right on the day it came using real-time charts, and I could book some profit as I mentioned using bearish hedges. Now it has come down a little bit from the top. There is no Q short setup. At the same time, looking at weekly daily, we are not going to buy YM right now. What about DIA? In the daily, it tried to go above the, sorry, not daily, in the weekly, tried to go above the watermark resistance where a bearish headwind came earlier, which could lead to a price drop. Tried to break above that for 2 weeks, but it failed. That is bearish. In the daily, it gapped up and then it is moving sideways. It is near the trend line which acted as resistance earlier that may act as support now. Again, if you look at the weekly daily, if at all we are going to take any trade, it is bearish, not bullish. But on the bearish side also, we are not so comfortable because there is no Q trade setup. The last of the market futures ETFs we study is Russell 2000 RTY for the future symbol. This is looking much better than the other futures or ETFs. The last 2 weeks candles have upper tail, but they also have hollow bodies, significant size hollow bodies. So we can say it is indecisive, not bearish shape candles like we saw in the other futures. And in the daily, it is much more bullish. Friday's candle, Thursday's candle, both are bullish. What about the IWM corresponding ETF? The weekly color is bullish, shape is indecisive. It broke above the watermark resistance in weekly and stayed above that. In the daily, it broke out and holding on to the price gain. This is the most bullish of the 4 market ETFs and futures. It seems small cap stocks are doing better right now, and not it seems, it is doing better right now. That is obvious from the relative performance steeply tilting up. One reason that the other than Russell 2000, the other narrower market futures ETFs are not doing so well. One reason could be that the mega cap stocks are not so much bullish. Here, if you see the weekly move of the mega cap stocks, Tesla made a very large percentage gain because of the confirmation of its inclusion into S&P 500. Netflix has a gain for the week, but the other very large cap stocks, mega cap stocks, Amazon, Apple, Google, Facebook, Microsoft, all went down for the week. They went down, but they didn't go down a lot. Still, this small down move for the week of the mega cap stocks might have contributed to the small down moves in the market futures, that is non-Russell 2000 futures. Market is overbought and not looking so bullish other than small cap. Let's spend a while more looking at the market breadth. First, I am going to look at the Nasdaq and NYSE composite market breadth. Here is the Nasdaq composite and here is the NYSE composite along with 3 internals or market breadth indicators: new high low, advanced decline, up down volume. Okay, used to be 3. I added one more, Macmillan oscillator for both Nasdaq and NYSE. If we look at the Nasdaq composite, it could not close above the trendline resistance, that is bearish. NYSE has upper tail in the two weekly candles. These are weekly charts. However, the color is bullish. Still, looking at the upper tails, we are not going to be very excited about buying. Is it bearish? The market breadth is saying it is not bearish. And let me explain how I have updated the market breadth a little bit. The new high low is same as before. The new high low for Nasdaq composite and NYSE composite, they are remaining pretty bullish. The last bearishness was only here during the beginning of the COVID crisis. Since then, new high low has never turned bearish. Now the advanced decline and up down volume, they are now oscillators. They are oscillating between 100 and minus 100. How to use them is to look for divergence. That is, if the oscillator comes down while the price goes up, that will be a bearish divergence, and that usually leads to a drop in the market. The same concept is usually applied for Macmillan oscillator, but you know, I never used Macmillan oscillator before. I am explaining one thing today why I don't use, and next week probably I'll remove it again. What is more reliable in my view, and I'll explain why, is advanced decline oscillator and to a lesser extent up down volume oscillator, and also new high low. Usually new high low is also an effective indicator. However, nowadays the stocks that are at the very high price level, they seem to be holding on to their price gains. That's why the new high low is not coming down so much. New high low reflects the strongest and weakest stocks. Those may not be changing so much. At least the strongest stocks are not changing much. Whereas advanced decline shows the overall breadth. That strength or weakness cannot be hidden. That's why advanced decline tends to be a better reflector of what may be coming next. Not Macmillan oscillator. The concept of using Macmillan oscillator is also divergence, but see the weekly chart of Nasdaq composite here. There was very clear divergence here in Macmillan oscillator. Price happily went up. So if you used Macmillan oscillator's divergence, you will have a lot of false signals. The other ways of using Macmillan oscillator may be zero line reject. Again, that will give so many false signals that it loses its usefulness for deciding trade direction. In my view, if an oscillator doesn't have enough reliability, it only confuses us. It doesn't add to our decision making capability. That's why I don't use Macmillan oscillator. That was Nasdaq Composite's Macmillan oscillator, and if you look at NYSE composite, again there is a clear divergence here, but price happily went up from there. This happens many times. Here also there is a divergence, but price went up. Therefore, Macmillan oscillators are extremely unreliable. People talk about it too much. Probably they want some breadth indicator. Macmillan is a famous indicator, so they keep it on the charts and they focus on the times it worked. They conveniently forget the times it didn't work and say Macmillan oscillator is very useful. In my experience, not so useful. On the other hand, if you see the only sizable drop, or maybe two sizable drops I can see here on the entire chart, one is from here, one is from here. The telltale signs of a possible drop came from, firstly, from advanced decline. There was much clearer divergence. In fact, not only divergence, the advanced decline started becoming negative in the late December, even before the price actually dropped. So if you looked at advanced decline, that gave a telltale signal, and that is expected. The another advantage is McLaren oscillator has moving average calculation of a large number of days. That tends to be slow, whereas advanced decline oscillator that I am using here has zero lag. It tells what is happening right now, and using the extremes and divergence you get much more reliable signals. How to use the extremes? One way is to see if it is going to extremes, we may look for a reversal, but the actual reversal signal has to come on the chart using Q signals, either stretch release or headwind, these two signals, or support at memory trend line. We will not simply use the extremes to take a reversal trade, but extremes in advanced decline oscillator, to some extent up down volume oscillator, combined with a reversal signal on Q charts will lead us to pretty confidently take reversal trades. Similarly, if we see clear divergence, we may get ready, and in this case when the bearish headwinds came, we would confidently take bearish trades, protect our long positions. The same thing would happen earlier when we saw the divergence in advanced decline. Using the bear release signal, we could initiate short positions in individual stocks. This is NYSE composite, Nasdaq composite. In both cases, the advanced decline is the oscillator, especially the oscillator is the most reliable breadth indicator. New high low tends to be pretty useful, but not in the recent times because the stocks at the very high are keeping to their price levels. Up down volume oscillator is also useful to a lesser extent than advanced decline oscillator. McLaren oscillator, in my view, confuses more than giving any reliable signal. So I will remove it again from the next week. I just wanted to explain in today's session why I don't use McLaren. Now, if we look at the two pictures again side by side, is there any bearish signal from the market breadth indicators, the reliable ones? No, there is no bearish signal. That also seems to show that overall the market is not so bearish, though the major futures may be coming down. That may be because some of the stocks that were very much overbought, especially large cap, mega cap stocks, not only tech stocks, I showed in the last webinar, not only tech stocks but non-tech stocks also, they may be stalling, not going up anymore. Are there many bearish signals? Not really, I couldn't find, so I cannot be bearish. Instead, there are many buying opportunities. But as I mentioned in my website post, if you already have a lot of long positions, this is not the time to add to them because market may pull back, it is overbought. When it pulls back, we'll have plenty of buying opportunities. Now, I wanted to also look at market breadth for the major indices. I looked at the major indices, major market futures and ETFs. Now let's look at the indices. This is Dow Jones Industrial Average, and here I have also plotted the breadth indicators. I'll ignore McLaren oscillator for the reasons I explained earlier. The other breadth indicator, and here the new high low percentage advanced decline oscillator, up down volume oscillator are calculated on Dow Jones Industrials. Is there any bearish divergence in advanced decline up down? No. Is there any bearishness in the new high-low percentage? No, it never turned bearish. Magenta color and advanced decline up-down oscillator is simply moving up, down, up, down. There is no bearish signal from the market breadth indicators. If you look at the index itself, it is below the previous watermark resistance from where the bearish headwind could lead to a huge price drop. It couldn't break above the watermark resistance formed by the bearish headwind. Therefore, we cannot be so bullish. Instead, if price comes down, it may give us box kind of short setup. However, the market breadth is showing it is not so bearish. That is Dow Jones Industrials. Let's look at few others. This is Nasdaq 100. The same study. There is no bearishness looking at the market breadth. The index is looking indecisive, moving sideways. There is no signal from the index itself. What about S&P 1500? Again, there is no bearishness in the breadth indications. It is at a high price level near the watermark resistance. However, there is a trend line support also. So it is not telling us anything about possible higher probability trade direction. Market breadth shows there is no bearishness. And the last one, S&P 500. Again, there is no bearishness in the market breadth indicators. No divergence. No divergence in advanced decline or up-down volume. Instead, the recent peaks were pretty high as you can get in a normal market up move. New high-low percentage never turned negative. So the market breadth is telling us it is bullish overall under the hood, not bearish. The price is overbought. That is a reason to be cautious, not to take too many long positions. Now let's look at the sectors, and first let me share two charts that I always share. Week to week comparison of the 11 sectors. Here I have the chart from the previous week. The green bars represents previous week's performance, red this week's performance. So 1 week ago, from bullish, it became even more bullish. And this week, from very bullish, it became less bullish, but still pretty bullish. 8 of the 11 sectors went up. So this week still ended pretty bullish, though the bullishness reduced from 1 week ago when all the 11 sectors went up. Which sectors went down? Utilities, consumer staples, healthcare. They are defensive sectors. Non-defensive sectors went up more. That is also showing that overall at sector level, market is pretty bullish. Now let's look at Q edge. Let's look at the Friday's performance. Friday, if you look at the sectors, industries and stocks, it is about 60% bearish. Advanced decline of sectors, industry stocks, all around it is about 60% bearish. 4 sectors went up, 7 went down on Friday. That seems to look bearish. However, I tweeted the picture on Friday, I think right at the market open. Let's check it out. Yes, this is the tweet that I shared right at market open on Friday. on the dot, 9:30 a.m. because Q edge is real time, vital index, everything is fully real time. I looked at the sector, industry, stock advance decline right at 9:30 a.m. It took few seconds to calculate the breadth inside, and see right at the open 100% of all the sectors, 11 sectors were down. Almost 90% of industries were down, 76% of stocks were down. That was very bearish. How it closed Friday? I tweeted about that also. It closed about 60% bearish. So that is a big improvement from how it opened. And this is what happened for several days. Let's look at, for example, IWM, fine tune intraday chart, and in this case I am using 10-minute interval. On Thursday also price tried to go down. This is Thursday's beginning, this is Friday's beginning. On Thursday it first tried to go down but pretty nicely recovered. On Friday I did WM slightly tried to go down but again very nicely recovered. If we look at one more ETF, SPY, by the way, similar things happened earlier also. This is Friday, Thursday, Wednesday, Tuesday, Monday. So you can see on Monday also it tried to go down, recover. Tuesday also huge recovery. Wednesday it didn't recover but couldn't take out Tuesday's low or even Monday's low. That was Wednesday. Thursday recovered again, Friday recovered again. When you see market ETFs are trying to go down but not going down, then we cannot be bearish. And if we look at QQQ, the weakest of the 4 ETFs right now, this is Friday, Thursday, Wednesday, Tuesday, Monday. Practically moved sideways. Though it might have felt like that it is coming down sharply, and it did come down sharply few times, but it recovered also sharply, and overall for the whole week even the weakest market ETF tried to go down but didn't. And when that happens, again when market ETFs try to go down but don't succeed in that, then we cannot be bearish. That's why we cannot be bearish now, and the sectors are pretty bullish, small cap stocks are bullish. So what is the conclusion? We may buy stocks. Again, if you already have a lot of open long positions, this is not the time to buy, but there are buying opportunities. I mentioned in the last webinar also, if you are selective, cautious, you will find lots of buying opportunities. I look at some of them, but before that I wanted to mention about a stock that one of the Q traders sent to me. He sent me an email, and in that email he first mentioned about a stock that I shared earlier, that was on home, and then he mentioned another stock, and I found some similarities between the two stocks. So let's look at the post on home first, the one that I shared earlier. Which one will this be? Maybe this one. Started 11 days ago. Yes. Let's look at the snapshots I shared at that time. Okay, I first looked at BBBY using Q radar on TradeStation. BBBY gave multiple buying signals. But I don't buy a stock before doing a peer analysis. I did a peer analysis of BBBY and found HOME, HOME, to be a very strong stock. Excellent valuation, very high earnings growth, 683%, with a short squeeze potential. On the day I shared it, 100% of the 7 peer stocks were up. So the industry was up in itself. And this is how HOME chart looked like. In the weekly, it dropped sharply and stabilized at the place where you could see multiple lower tail candles. Those lower tail candles at the same price level, they were showing that bigger players are buying at that price level. In the daily, it came to the watermark support, created a false downside breakout, gave a bull release signal with bullish pressure, U-turn, traffic light color turned neutral. That met all the requirements of a box long setup. In daily, in weekly, the backdrop color was not yellow. However, looking at multiple long lower tail candles, I thought the support was enough to take a box long setup in HOME. That was then, and let's look at HOME now. I shared the box long setup on this day. Since then, it has very nicely gone up. Much more than the risk distance is covered now, and the gentleman who sent me an email, Harry, he said he booked profit on Friday. I think that was a very good decision. We don't know what will happen on Monday. However, on Friday there was an upper tail candle. The backdrop color is still remaining magenta. Weekly candle has an upper tail, and most of all it has given very nice profit. I tend to avoid taking naked calls, but that gentleman mentioned he took a naked call option, and in this case of course he has made a very nice profit because the stock nicely went up. Now HOME I could suggest buying right at the bottom, and the stock that he mentioned in the same email was BABA, the Chinese ADR. And if you see on Thursday again, BABA gave a bull release signal. Is there any watermark support nearby? No. Is there any trendline support? No. However, if you look carefully, the previous earnings was here, shown by this white dot and the dollar symbol. That was the base of the up move after the earnings. So there were people, many people in fact, who were buying at that price level. From there, price went up, came down, went up again. This was earnings again came down after the earnings, stabilized at the same price level from where price went up after the prior earnings. It created a false downside breakout at that level and gave a bull release signal. There was very high volume at the prior buying point, and it is okay to assume that some of those players would like to buy again at the same price level. Of course, we would not buy a falling knife when the stock is dropping. We would wait for the bull release signal that came on Thursday. However, Thursday didn't have high activity or bullish pressure. That is okay because the prior drop was also associated with extreme high activity. And as I mentioned, the buying at the prior earnings price level was very high. The other thing to keep in mind that some of this sudden drop in Baba was associated with the failed IPO of Ant Financial that could not be IPO because of some regulatory issues. But Baba itself is a robust stock. Looking at that, you could take a long position on Thursday or Friday. Is it a perfect Q trade setup? No. That is why I don't share this kind of trade setups on my forum. Usually I don't do. But if you are watching a stock and you notice the important things like the base of an earnings move up, if you know why the price dropped, at least some of it is related to Ant Financial, and then you saw the bull release coming up, relative performance tilting up, you could buy the stock. And I think that gentleman did a very good job. I did take a position that is using call vertical. I don't like to buy naked calls. I'm not looking for a large profit from an individual trade. So I took a long call vertical and I took it on Friday. I took it before the gentleman sent the email. Now, how did I find the stock? There was no Q trade setup. Therefore, I could not find it from Q radar. How did I find it? Could I find it using top-down approach? No. I think no, because for top-down approach, meaning starting with Q edge, to be able to find from that top-down approach, drilling down from strongest sector to strongest industries to strongest fundamental stocks, the stock has to be in S&P 1500. But Baba is not part of S&P 1500 because it didn't give a perfect Q trade setup. I could not find it from Q sonar. You can see I have put Baba on Q radar. It has a bullish pressure, but it doesn't have any of the bullish trade setups. Headwind, box, go with flow, breakout or bounce. Doesn't have a trade setup. Has some bullish strength. How did I find it then? It is not possible to go through thousands of stocks, and that is where the fundamental first approach comes handy. In Q Vital or Q Universe, which is a replica of Q Vital, I tend to look at the liquid stocks, which has about 2,400 shares, stocks, companies. In real time, I bring them to the watch list and calculate a scorecard. This has all the liquid stocks. Currently, this list has 2,400 stocks. And now first I try to find stocks that are strong fundamentals, both in terms of valuation and earnings growth, that is using the 3-star button. First I try that. If I don't find suitable buy setup after combining fundamental, industry, technical, then I relax the criteria. I look for either great valuation or great earnings growth. Usually you will find trade setups from there. And if you are interested in doing box stocks analysis, like stocks that are going up in multiple quarters, quarterly or yearly, or extreme high earnings growth, you can do all those analysis using the other action buttons. Usually you may find suitable trades from this 3-star and 1-star candidate. So on Friday I first click the 3-star and see Baba is here near the top. It has excellent valuation. Secondary valuation is also excellent. Earnings growth for the last 3 quarters and last 3 years all are positive. If you look at the last 3 quarters, it is going up from 7.4 to 18.3 to 37.2%. if you look at the revenue growth for the last 3 quarters, again it is going up from 22.3 to 33.8 and stabilizing at 30.3, around 33%. The yearly revenue growth is also positive. So fundamentally, both in terms of valuation and earnings growth, revenue growth, all the important aspects, Baba is very strong. On Friday, it went up by 4%. It is 15% below 52-week high, about 60% above 52-week low. Fundamentally, it was strong, and I could find it using a few simple mouse clicks on my stock universe using the workflow fundamental first. I didn't look at technicals charts, I didn't look at technical scans, I didn't do a top-down analysis from sectors to industries to stocks. I did fundamental first, looked at the strong fundamental stocks that were going up on Friday, and I found Baba. Then I looked at its charts. Let's look at its charts. Oh, we looked at it already using Q Elite. So I don't have to open again using Q Global, but you could do that. All are integrated from Q Vital. You could open, and the same signal would come in Q Global as well. That is how I identified and traded Baba. As I mentioned, if you are cautious, you can find nice trading opportunities. The home HOME trade idea that I shared earlier and Baba that the gentleman sent on, I think, Thursday or Friday by email, they have a similarity. In both cases, we could buy at the extreme bottom. Home has given a good profit, and I am expecting Baba to go up. The trendline resistance will be the logical profit booking point. Let's look at another post. I have few more minutes that I shared recently. I want to look at KSS because not only entry is important, exit is important. I explained that the gentleman Harry exited home very nicely, looking at the Friday's candle. Very good job. Now let's look at another stock I shared recently, Coles, KSS. It's good to revisit sometimes not only the entry but the exit points. This is first time when I shared about Coles. That was on 14th November in the weekly market roundup, weekend market roundup. That time it gave a bullish backdrop candle, and in the daily it gave a bullish flow candle. Therefore, it gave a go with flow long trade setup. That was on 14th November. I'm scrolling down. Let's check the last post date. 4 days ago, that is 18th November. So 14th November, I shared it in the market roundup on this day, and then when it came up and hit the trendline resistance, I mentioned that that would be the profit booking point. The trendline resistance was in daily as well as weekly. Remember just now I showed the BABA stock, and I mentioned the trendline resistance will be the logical profit target. That is what I did in KSS also. It hit the trendline resistance. If it could decisively break out from the trendline resistance, I would hold on to the trade, but because it was reversing in real time, I could see that in fact it would have come on Q Elite radar also, showing a bounce down or touchdown. Using that, you could be alert, and also if you have a long position, you would be aware of the trendline resistance and keep an eye on it. Looking at that, I exited my KSS position with a nice profit. How is KSS today? I didn't check how it did after that. Let's see if it could break out of the trendline resistance. No, it could not. it is still below the weekly and daily resistance. I exited right on the day. First time it touched the trendline resistance, came down. And earlier in the last webinar, I mentioned how I used options because I was using options and stocks both. It would be good to exit at the right point. If I hold on to the trade, especially the options, would lose value very fast. So I exited cases with discipline. Very nicely entered, I would say, and equally nicely exited following discipline. Another idea that I shared, I have 4 more minutes before it hits 1 hour. I would like to share 2 more stocks or review 2 more stocks. One of them I shared in the forum earlier, VRTV. Okay, what was the day? 6 days ago, 16th November, I shared about it. And I shared that in the morning session, 9:45 a.m. New York time. At that time, the industry, trading companies and distributors was very strong and accelerating. Fundamentally, it was very strong. Great valuation and earnings growth, similar to Baba. Has a short squeeze also on that day in itself. 92% of the 48 peer stocks were up. Strong industry, strong fundamentals. And this is how the chart looked like in the morning session. It was breaking out of weekly trendline resistance and daily had a bullish flow candle with higher high, higher low. Weekly backdrop color was already bullish. Therefore, if the candle closed like this or better, it would give a go with flow long trade setup. With that anticipation, I shared it and I followed up earlier. Let's look at that. On that day, price came down, closed down, and if you look at the magnifying chart, the right corner, it closed with a bearish shape candle that did not meet the requirements of go with flow long trade setup, so one would not take a long position at the end of the day. I explained in the last webinar that I took a long position using intraday chart and managed it so that I could exit it with a small profit. That was when, let's check again, that was 6 days ago on 16th November. Fundamentals were very strong. Why did it come down? It is sometimes useful to know what is going on in a stock. Like in Baba, I mentioned it came down partly because of the Ant financial issue. The IPO couldn't go ahead. And VRTV, I mentioned earlier also, one reason it could have come down is that right during this time it announced a secondary offering. Then it pulled down right to the yellow direction line. The weekly backdrop color was and still remaining bullish. Because I knew about the stock's fundamentals and it is in a trading industry. So if the US economy is going to improve or at least people are going to go out more and activities are happening more, then this company may do better if the vaccine is effective, COVID vaccine. That is a hypothesis, but I buy only based on Q360 degrees analysis. Fundamentals were strong. I was waiting to buy the stock. I saw on Wednesday it gave an indecisive shape candle right at the yellow direction line. The relative performance tilted up and see the extreme high volume when the secondary offering was made. That drop was associated with, much more than extreme. This dot location shows the extreme volume level and it was much more than the extreme volume level. And very next day it created an indecisive shape candle also with extreme high volume. That means people were starting to buy. It was unlikely to go down, and even if it came down, the stop would be very narrow. So I took a long position next day when price was starting to go up, I took a long position using Q fine tune chart. Since then it has gone up, and if you look at sonar, let's put not sonar, not sonar. Okay, let me show one thing. Let's check VRTV's fundamentals. Okay, it's here. VRTV fundamentally is very strong. That I showed earlier in the forum also. And if you look up the trade signals of VRTV using Q Finder, this is Q Finder. Look up from Q Finder. Let's do that. On Friday, it gave a pullback long trade setup. What is a pullback long setup? Let me explain. I have explained just now, but let me open it, close the existing chart, click the chart icon here to open it in Q Global. I could do that on Q Elite also. The pullback setup. Pullback setup is a setup in a strong fundamental stock that is going up. In this case, this stock had higher low, higher high, very strong fundamental. Then it pulls back right to the white yellow direction lines. In this case, it was above both, stops right at that point, and then starts to go up again. That's a pullback setup, and that calculation is there in Q Finder. It gave the setup on Friday. You could do that Q Finder run during market hours and take a position early morning also. In this case, because I was aware of the stock, because I saw price stopping right at yellow direction line, then an indecisive shape candle, both associated with very high volume, stopping volume you may say, I took a position on Thursday itself. Thursday didn't keep the pullback setup. Why? Because the traffic light candle color in daily was still red, bearish. That's why the pullback setup didn't come. It came on Friday, but using my analysis and post that I made earlier, I could take a position on Thursday itself. It's a very strong fundamental company. Let me explain one more trade idea, and again I am going to take it from the forum. This is an idea I shared on Friday. ACIW. You can see that if you use Q systems, you can master the art of buying at a lower price. You will not like to buy as breakouts because by that time price has already gone up. You could see that in home, you could see that in Baba, you could see that in VRTV, and now you see in ACIW that I shared on Friday. Application software industry, very strong. This is as of Friday, just near market close. So I think the setup might have been confirmed. We'll look it up. But let me look at the post as I shared it. Great valuation. Earnings growth is not so great. That's fine. I'm looking for either value stock or growth stock. 66% of the industry peers were up. So it was strong. Relatively, we already saw from QH scorecard, it was strong relative to other industries. And see the chart. Again, a strong fundamental stock that was going up in an uptrend with higher low, higher high. Very nicely pulled back after displaying the bearish headwind. Stopped right at the trend line support. Displayed a doji candle on Thursday with very high, what you may say, stopping volume. If it was bearish volume, it would probably break below the trend line support and it would probably have a bearish shape candle. But instead it had an indecisive shape candle with very high volume at trend line support. I would call it a stopping volume, and on Friday it was starting to go up after creating a reversal. So initially price went below Thursday's low and then reversed. I could look at all this in real time and I could take a long position in ACIW. And did I mention how I took it? I shorted the put. Sometimes when I am comfortable holding on to a stock, as I mentioned again, I don't take speculative options positions like simple calls that have time decay. Instead, I shorted the put. Time decay is in my favor. Volatility also is in my favor. I shorted the put, and by the close on Friday itself, I have 30% profit in the trade. One technique to close short put positions, naked short puts, is to close at 50% profit. What I do, I usually tend to give a closing order at 80% of max profit. However, keep an eye on it once it hits 40, 45, 50%. And if it hits 40, 45, 50 and starts to reduce, I book my profit. If it continues to increase, my GTC order is already there at 80% of max profit. Again, SCIW, a strong fundamental stock that you could identify in real time. If you put SCIW in Q Elite, you could see multiple bullish signals on Friday: reversal, go with flow, bounce, and memory touch. Stock in an uptrend shown by D column direction. Relative performance is strong, bullish traffic light. That is a part of the go with flow requirement. And if you used Q Vital to look at its strength, let's do that. ACIW.O. I am going to look it up from Finder. Again, the Finder shows the same signals: go with flow, touch, bounce, reversal. In some ways, I like Finder more than Q Elite Radar, because you know the radar is very powerful, but it cannot process 2000 plus stocks at the same time. It will crash. Whereas Q Finder allows me to do a complete analysis on my stock universe. As I showed, my mid-price liquid stocks list has 2400 stocks. I like to find the best candidate from this. I don't want to be limited by radar's limits that I can process only 200 or 300 stocks at a time. That's why I prefer Q Finder. Now I have made some changes in Q Finder. What other changes did I make? I mentioned already. I made some changes in the market breadth calculations. I made them oscillator for advanced decline and up down volume. I added McLean oscillator, but I will delete them. It's more confusing than useful. The other change I made was in Q Finder. Now Q Finder weekly and daily are merged into a single system. Let's spend few minutes to look at Q Finder. The weekly picture, the balance of bearish and bullish signals using all the important Q signals. If you look at weekly signals, 65%, all signals, 65%, all signals are bullish. Strength signals, 94, very high percentage bullish. Trend continuation also 69% bullish. Only reversal signals are bearish, 83%. That is expected because we saw the market is at a high level, so reversals will come more often. We saw several market futures ETFs also tilted down from resistance. This is the weekly picture. Overall, we have to say it is bullish, and we saw the sectors are also overall bullish. If we look at daily in the same program now, weekly daily in the same program, if we look at all signals, it's balanced. Strength signals balanced, slightly bullish. Continuation signals balanced, slightly bearish. Reversal signals balanced, slightly bearish. Overall, we have to say it is balanced. So neither Friday's picture is bearish nor weekly. Weekly is certainly bullish rather than bearish. So now if we combine all the insights that we got, what is our market view? Market view is bullish. There is no way to be bearish because the weekly backdrop colors are still mostly bullish. It is overbought but bullish. So let me make it a green color. market view is bullish. Sectors are also bullish, more sectors. So in top finder is also bullish. We have to say the market is bullish. Preferred trading direction, I will say that we have to be selective. This is a case where I will say selective. There are buying opportunities and I bought some stocks as I mentioned, ACIW and few others, but you have to be careful and buy in stocks after studying them, what is going on in the stocks, whether it is BABA or ACIW or VRTV. If you study them a bit, their industries strongs, fundamental strength, technicals, then you are able to buy it. Again, if you already have many long positions, probably it's better not to buy, add to those positions, wait a bit for a pullback. Still, there is no reason to be bearish, reason to be cautious, but there is no reason to be bearish. That is my view. We are past 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session. That will be on Wednesday, 8 a.m. Eastern Standard Time on YouTube Live. Have a great weekend. Keep safe. And as I always say, if you have a robust system like Q or any other system as robust as Q, real-time systems, and if you are disciplined, there is no reason to not make some money from the market. So trade profitably, take care, and thank you. Bye bye.